Bitcoin's up 3.34%. Did Trump's delay on Iran just spark a rally? Profit in Peril, where we cut through the noise to give you the hard-hitting financial news. Bitcoin has leapt past $70,000, riding the wave of geopolitical tension. Trump's decision to hold off on striking Iranian power plants has investors buzzing. But what does this mean for your portfolio? Stick around to find out. Here's the part nobody's talking about. Remember, this is not financial advice. Now, let's dive in. Trump's postponement has eased geopolitical tensions, and Bitcoin's price surged to 70,113 cents, up 3.34%. This movement isn't occurring in a vacuum. While European markets face pressure, Bitcoin's resilience is driven by its appeal as a hedge in uncertain times. The crypto market has seen significant whale activity, with long-term holders selling, yet whales are buying. On March 19th, two Bitcoin OGs sold $117 million, yet whales absorbed the shock, keeping Bitcoin buoyant. Here's the part nobody's talking about. Interestingly, this isn't the first time geopolitical events have influenced Bitcoin's trajectory. Historically, whenever global tensions rise, Bitcoin often acts as a refuge for investors seeking to escape traditional market volatility. The ongoing narrative of Bitcoin as digital gold continues to gain traction, especially as other assets falter under geopolitical pressures. So what happens next? That's where it gets complicated. Let's break down the chart. Bitcoin briefly touched $75,000 before retreating. Despite the sell-off, whales have been acquiring Bitcoin at an average of $72 and $63. This shows strong support around the $70,000 mark. The daily trading volume hit $21 billion, with the recent sales making up just 0.5%. Here's the part nobody's talking about. This volume suggests substantial market interest and potential stability at current levels. The chart highlights a familiar pattern where whales capitalize on dips, reinforcing support levels and setting the stage for potential upward momentum. This buying behavior by whales indicates confidence in the long-term value proposition of Bitcoin, even amidst broader economic uncertainties. Why are Bitcoin OGs cashing out while whales dive deeper? One key factor is the Fed's recent rate hold and inflation forecast. This signals economic caution, prompting some to lock in profits. Yet whales are taking a long-term view, perhaps anticipating further gains. With geopolitical tensions easing, Bitcoin's role as a digital gold shines brighter. Here's the part nobody's talking about, but here's where it gets dangerous. In the volatile world of crypto, market sentiment can shift rapidly. The Fed's stance introduces a layer of complexity, as interest rate adjustments directly impact fiat currency stability, indirectly influencing Bitcoin's purchasing power. Furthermore, the evolving regulatory environment poses challenges. Regulatory bodies worldwide are scrutinizing crypto markets more closely, which could lead to increased compliance costs and operational hurdles for exchanges. But wait, despite these risks, whales continue to see value, possibly predicting a future where Bitcoin's limited supply and decentralized nature offer unparalleled advantages over traditional currencies. As institutional interest grows, so does the infrastructure supporting crypto investments, including custody services and financial products. These developments could insulate Bitcoin from some market shocks, but investors must remain vigilant. Understanding these dynamics is crucial for any investor aiming to navigate the crypto landscape effectively. Comparing sectors, Bitcoin's performance dwarfs traditional assets like bonds and stocks, which face volatility from rate changes and geopolitical risks. This divergence underscores Bitcoin's unique position as both a speculative asset and a hedge against uncertainty. Its price action hints at potential stability, but let's see what's lurking beneath. Over recent months, Bitcoin's correlation with traditional markets has decreased, suggesting that it's carving out its niche as an independent asset class. This decoupling could make Bitcoin an increasingly attractive option for diversification in portfolios, particularly as macroeconomic challenges persist. Despite the optimism, risks loom large. If geopolitical tensions flare up again, Bitcoin could face volatility. Moreover, regulatory landscapes in major economies remain uncertain, with potential crackdowns posing threats. Investors must also consider the impact of future Fed decisions, which could shift market dynamics quickly. Stay vigilant. The landscape is as unpredictable as it is promising. Here's the part nobody's talking about. Additionally, technological risks, such as network scalability and security vulnerabilities, could also affect Bitcoin's adoption and price stability. Investors should be aware of these potential pitfalls and ensure their portfolios are adequately diversified to withstand any unforeseen challenges. The speculative nature of Bitcoin means market sentiment can shift in an instant, often driven by news and social media narratives. Looking ahead, Bitcoin's trajectory will likely hinge on global events and economic policies. While short-term volatility is probable, the underlying demand from institutional investors and whales suggests long-term potential. Keep an eye on geopolitical developments and central bank moves. They could be the tipping point for your crypto strategy. As nations explore digital currencies and blockchain technology, Bitcoin's role as a pioneer in the space might further solidify its position as a significant player in the future of finance. In the end, Bitcoin represents both profit and peril. Smart strategies like watching global cues and managing risk can safeguard your investments. As always, stay informed and be ready to adapt as the market evolves. The crypto landscape is ever-changing, and those who remain flexible and informed are best positioned to capitalize on emerging opportunities. Drop your take below. Are you buying, holding, or selling? Tomorrow we're breaking down the Fed's latest moves and what they mean for your portfolio. Don't miss it.